What's up, guys? Can everyone hear me? Drop in the chat if you can hear me. Okay, perfect. Seems like you guys can hear me. I know with this this webinar software that we've got, it can be a little laggy. We found that out pretty quick, and I think it's just because like they record and it's like a very advanced type of software. Like it's pretty expensive too. It's almost $1,000 per year. But yeah, they can be pretty laggy. So just so you guys have a heads up. Okay. So all right, so here's the thing. I've got my charts pulled up and I'm sharing my screen right now. But when I switch back to, like the full screen where I can see you guys' messages and stuff, like, as you can see, it's kind of out of whack. So, I'm going to be switching back and forth just to try to keep up with you guys' messages and everything. So just like, bear with me because I can't like see both at the same time. It's not like GoToWebinar. But we're going to wait for a couple more people to hop on. I just posted the link and everything. The time difference, I'm in New York right now. The time difference kind of threw me off. So that's why we're posting last minute. Gonna wait for some more people to hop on here. Okay, starting to slowly build up. And there'll be a replay, so I'm not going to wait too long. But on this webinar, guys, I want you to ask some questions, Seth. Okay, he's asking, could I go over resets and do the same rules apply as 1.0? No, it sounds like you have not went through 2.0 at all. And, really, I don't want this to be a like, what's the words I'm looking for here? I don't want this to be the training all over again. I want this to be more advanced so we can talk little bit more about the nitty gritty. And, okay, Seth, it says that if you're saying that you've went through the 2.0 training twice, then I meant from a resets perspective. Okay, we'll talk about resets. We'll talk about reversals. Really, like I said, this is supposed to be more of like an advanced levels webinar. I want to like really break some stuff down because like people are starting to slowly get it, and like I want to make sure that like everyone does. You know what I'm saying? Like, because there's just some kind of like layer of confusion. So I just want to make sure that everybody's getting it. Let me see if people are hopping on. Post a quick message. Okay, I'm done waiting. Plenty of people have registered, and we can go ahead and get started. So, like I said, on this training or this webinar, I want to be going over levels a little bit more in depth. I know I spent literally an hour and 10 minutes on the training, just going over levels and everything. But I want to make sure that you guys actually get it. Okay. I posted a couple videos in our little chat or whatever, and I've talked about it in the group, in the Facebook group and everything. But I want to make sure that you guys really understand how to use these, because the thing is when you understand levels, you understand the strategy. You understand like how things really work in Forex. Okay. Um, so I want to make sure that you guys like have a full grasp of this. Okay. So I'm going to like, you guys can feel free to throw out examples, or, some charts that you guys don't want me to look at, but I'm going to just be going over the examples that I have off of the top of my brain. And then we'll go from there. I have a question real quick. It says, in level consolidation on the daily, the reversals on levels 3, 4, and 5 will have a possible reset after level 2 is formed. Correct. Um, okay, I'll broadcast this message really quick. In level consolidation on the daily, the reversals on levels 3, 4, and 5 will have a possible reset after level 2 is formed. Okay, I'm trying to understand like the full question, but I think I understand what you're getting at. Okay, so basically, when we're talking about levels, the reason why I've been spending a lot of my focus on the daily is because one, I have been trying to train myself to trade more longer term, to hold trades for a lot longer, weeks if I have to, because I do understand this system 110%. And, I could see like the PIP and the profit potential by holding trades a lot longer from the daily chart. Now, the reason why I'm still teaching the hourly is because I understand people, they don't have that much patience. And then also, it's nice to have a firm understanding of what's actually going on between the two charts, the hourly and the daily. Okay. Now, the reason why the daily is important is because you have to look at this as the real trend. Okay. When it comes to the daily, you have to really look at this as this is the full Can everyone hear me? Can you guys see my screen now? I got the chart pulled up. Okay, perfect. All right. So I'm sorry about that, guys. I don't know what happened. I was like trying to get the screen back up, and it was just like tripping out. I really don't know. I had to like pretty much restart the whole thing. Um. Okay. So I don't know where I left off, but I'll start over again. Basically, what I was trying to say is, if we had to think about levels, it's basically a channel of support and resistance. Okay? That's all it is. It's a channel of support and resistance. And understanding the support and resistance in this channel, it can really boost your game. Like it's boosted my game like so much. Like you guys have no idea how much it's boosted my game. I can hold trades a lot longer. I'm a lot more confident. It just, I was already a very confident trader. So like for this to, um, to really boost my game, it says a lot. You get what I'm saying? Like it's basically, I don't want to like, keep going on and on about it, but basically you guys have to understand this. So when I say it's a channel of support and resistance, basically a level, if I had to like break it down, a level consolidates up and down, okay? But overall, the movement is still sideways. I feel like most of you guys on this training, like you guys have seen consolidation before, and you may not have seen it on the daily until 2.0 came out, but the best way to describe it is consolidation moves back and forth. It moves up and down, but the overall direction is sideways. Now, on the daily, and this is what I said before the screen cut out, on the daily, the power of the movement is going to be a lot stronger than the smaller time frames. It's going to be stronger than the 4 hour. It's going to be stronger than the hourly, the 15 minute, so on and so forth. The movement of price on the daily is a lot more powerful. Now, when we find ourselves in these support and resistance channels or levels, we can use this to our advantage by understanding the hourly chart. Okay? So, let me try to find an example, and you guys can feel free to spit out some examples. But I'm going to use some examples that I know off of the top of my head that are actually solid examples. I have the hourly chart pulled up on USD Jappy. Okay. Everyone, if you are a 1.0 member, you understand, level 3, drop to the 200. We pull profit at the 200. If the 50 and 200 EMA cross and they consolidate, they're going down to the 800, so on and so forth. Everyone understands that. Like, I feel like it was almost overly simplified on 1.0, and it started to kind of nip people in the butt. So basically, since we do understand that, we're looking at USD Jappy right now on the hourly chart. They've dropped down to the 200 EMA. They've started to consolidate. Now, when I say consolidate, this up and down movement here, this up and down movement is consolidation. This wick here, this is consolidation, okay? If I had to draw this out, they stay within a channel. That's all a level is. If they keep bouncing back and forth between this area of support and resistance, it is a level, okay? That is a level. And it happens on the daily. It happens on pretty much every time frame, but we're only focused on the hourly and the daily here. This is a level, okay? Now, I know some people have been looking at charts and they don't understand how this is a level. And I'll even put this on it so we can really understand it. They don't understand how this is a level. They just see it as like pullbacks and, just price movement. I really don't understand what's actually going on in their head. But you guys have to identify with these levels. Now, I put this in the training. Okay, we don't have any questions. I put this in the training that you guys have to identify with a level by looking at it as 2 to 4 hits within a zone, okay, or within a range. So when I say hits, basically what I'm talking about is, all right, so we had this little pullback here. They threw a wick up there. Then they came back to that first pullback. The circle here, they came back and they bounced off of it again, okay? Then they came back up to where that wick was, and they bounced off of that. Now we can identify clearly what's going to happen in the future, okay? So if we know that they threw that wick up there and they're bouncing off of it as if it's a line of resistance, we can identify with what may possibly happen in the future. We can use it as our guide, okay? And this is important. It may sound simple, but it's important. If we see, like, and actually I'm going to clear this up, and I'm going to put a little line on this. This is not a level. Okay, that's not a level. It looks like one. It looks like they tried to make one there, but I don't want you guys getting confused with it as a level. Why is it not? It's because they did not trend in that range long enough. That's just a pullback. When I see this, even though it looks like they threw plenty of wicks down here and they came back to this area of support, and then they came up to this area plenty of times. Even though it looks that way, to me, I still see this movement as something like this. I'm not looking at it with all these wicks down here. I look at it as one little pullback because I understand how price moves. You can't let these candles throw you off. Okay? You cannot let these candles throw you off. When I look at this movement right here, this is what I see. I see it sideways. I don't see it as this up and down. It is moving up and down within that area. But I don't see this as just one big pullback. I see it as a level. I see it sideways. I try to look at it as if I'm looking at it flat. Okay? Is this like making sense to you guys? Like, am I making sense here? Give me some yeses or give me some okays or something like that. Like, I want to make sure that I'm making sense. And then I'll continue. I'm just getting warmed up. Trust me. Okay. People are saying yes. All right, perfect. So basically, when I look at this movement, this is just one big movement. You have to look at candles as a picture. Okay, that's the best way to say it. You have to look at candles in the price movement as one big picture. Don't study individual candles. I mean, and that may help you guys, like it really doesn't help me. When I first started trading Forex, like I was given this intense like, you know, candle formation and candle pattern like chart or whatever, like, oh, this is a doji and this is a I don't even remember a morning star and evening star and all that stuff. It was exhausting trying to memorize that kind of stuff. Okay. And basically, what I'm telling you guys, for people that are trying to master my strategy, like if you use that stuff and it helps you, go keep using it. But I'm saying, like, me personally and how I built this strategy, I have not looked at that kind of stuff because it's confusing for this type of market movement. It really is. You have to look at candles as one giant picture. I don't look at just, oh, this candle, it's crazy. It's long. It's going crazy. They threw a wick there. I don't look at it like that. I look at this whole movement to make up one big picture. Okay? If I had to identify with this and call it something, this is a straight rise to me. There was I think it was Euro Jappy. Let me look at this really quick, and I'll look on the daily. Yeah, it was Euro Jappy. This is a straight rise to me. Like, yeah, they just pulled back, but this is still a straight rise, unless they start doing something like this. We got our top point and our bottom point. Unless they start moving within a channel, I'm going to call this a straight rise. Now, this right here, I don't look at this as a level. Even though it seems like it, I have to look at it as one big picture. When I look at this as one big picture, the market was going up and then they pulled back. That's it. They didn't, like, yeah, it looks like they stayed within a channel or they stayed within a level because of the wicks here and stuff. But when I look at it, look at the actual formation of the candles, all they did was go up and come right back down. Can everyone agree with that? Drop some yeses if you can agree with that. It looks like kind of like they formed, they tried to form a level. But if you look at the formation of the candles, all it's doing is they were coming out of a straight rise, they pulled back, and then they straight rised again. That's it. Okay? It seems to be making sense to everybody. All right. So You guys there? Can you hear me? Is it working? All right, I'm sorry guys. I'm in a hotel right now, so I think it keeps kicking us out because of the would be if I was at home or something. Can you guys see my screen now? Put a comment saying screen if you guys cuz if you guys can hear or I'm sorry, see it. Okay, perfect. All right, I'm sorry guys. So, let me get back to what I was saying. Um hopefully it wasn't out too long. Just want to make sure that I try to think back on what I was saying. Now, basically, when we're thinking about levels, I'm going to go through some examples, and hopefully, it starts to make sense. So basically, like when I look at levels, I'm looking at the full movement. I'm not looking at candles, and I think you guys heard me say that part before it cut out. I'm not looking at just candles, one individual candle or just, two to three candles. I'm looking at a full movement. Okay. Now, when I say that, basically I'm saying like I'm looking at the full pie. How many times did they stay within this zone? If the top of this green box is the resistance and the bottom of it is the support, how many times did they stay within that zone? Okay? Same thing applies for this. How many times have they stayed within these zones? They it's like they're creating a level, it's creating its own support and resistance. Okay? It's creating its own support and resistance. So, when I look at this, and I see that they've started to, we've came out of level 3 on the daily, and I see that they finally hit a stopping point, and they came back down to this area, and then they came down to this area, and then they came back up to this area. I have right to assume that this is a level because the movement is still moving sideways. Even though the stopping point was here, we can see how they're in a channel, how they're moving the movement sideways. Okay? And I'll go back to Euro Jappy too. I just saw somebody said that. I'll go back to Euro Jappy too. We can see clearly if we look at not just one candle, not just big wicks and things of that sort, if we look at it as one whole pie, we can see the levels clearly. We have to really zoom out and really see things for what they are. How many times in that green box did they stay within these areas? Quite a bit, right? Quite a bit. How many times did they stay within these areas? They broke out a little bit here. They broke out a little bit here. Oops, I don't know what just happened there. And they broke out a little bit here. But overall, they stayed within this area. Same thing applies for this. Where's my brush? Or I'm sorry, my rectangle. They stay within these areas. And as soon as you guys can see this clearly, not just looking at this as like, oh, it's, price movement, blah, 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 blah. You have to look at it as a real sideways movement. Okay? So, I tried to break it down in basic terms So now we're going to talk about how this actually applies to the strategy and how we can actually like use this to our benefit. Okay. So somebody give me a pair that they've been looking at all week. Somebody give me a pair that they've been looking at all week that applies to levels. Any pair, doesn't matter. And I'll look at it. Okay, I see a lot of USD CAD. GJ, EU. Okay, so I see a lot of USD CAD, so I'm going to look at USD CAD first, and then we'll make our way to the other ones. All right. So if I had to go through a checklist, I'm on the daily chart. That's the first chart that I want to look at. Okay, what's actually happening here? What's actually happening here? That's what I want to get myself in the frame of mind of. And we're using the EMAs as a guide. So what's actually happening on the daily chart? I see recently there was a lot of rise. We can look at our EMAs as our guide. There's a lot of rise. They finally hit a stopping point. They came down to the 200 EMA. Okay. I'm like, all right. They came out of level 3 rise. They finally dropped. What's happening now? What can I expect now that they've dropped? I can expect a consolidation. Okay. I can expect a consolidation. They've went from level 3 going into level 2. Even if I were to take, I'll take them off. Even if I were to take, the EMAs off and just look at this like as is, okay, we got a ton of rise. They dropped. What can I expect? I can expect the consolidation, okay? Now, if I had to draw this out, okay? If I had to draw this out, just how it is, yes, it's a consolidation, but it's moving upward. You can't let that kind of stuff confuse you. It's still consolidation. When I put I like using these rectangles, and hopefully you guys are using them to your advantage as well. Because the thing is like it helps me personally to see levels very, very clear. Okay, it helps me to see them a lot more clear. How many times do they stay within this area? It's a channel. It's a channel. They stayed within this area plenty of times. And then finally they broke out right here. Okay? You guys have to see this stuff and identify with it clearly. Okay? Now, when I say this for this movement, we're looking at the daily chart. Okay? We're looking at the daily chart. And like I said in the very, very beginning of this webinar, that on the daily chart, the movement is a lot stronger. Okay? So it's going to happen over a stronger period of time or a longer period of time. When I look at the very first pullback of that level, it happened in 2016. In April of 2016. That's a long time. Like that's almost a year and a half ago. Okay? That's almost a year and a half ago. So basically, when we find ourselves at these areas of where the pullbacks happen, here, all in these areas, if we can look at this and see the level clearly, we can use these areas of support and resistance to our advantage. The areas where the level has created a support and resistance for itself, we can use them to our advantage. It's a channel, okay? So if we see on the hourly chart, I'm just going to pretend here. I'm just going to pretend. We see on the hourly chart, the market's made its level here. They did a straight rise. They came up again. They consolidated. They came up again. Then they consolidated again, right? So we're in a level 3 on the hourly, okay? On the hourly. I just want to make sure that everyone understands that. And then we see a movement on the daily that's at the top of its resistance. So we see this move here. Now I'll delete everything else. We see this bounce here. Okay, it's coming up towards that bounce. All right. What can we assume if on the daily, I'm sorry, on the hourly, where'd my drawing go? I don't know what happened to it. But on the hourly, we have this movement. Looking for a drop. We have our 3 levels, and we're looking for a drop. And we see that they're within a channel on the daily. Okay, we see that they're within a channel because they're within their level on the daily. Remember, the movement, make sure that we're still good. Okay, it's still recording. The movement on the daily is a lot stronger, right? So if it bounces, if it's coming up towards this channel or this level, this resistance on the daily, we can assume that the drop is about to happen on the hourly. It's imminent. Because for one, if we compare everything, for one, on the daily, they're only in a level 2. So there's still drop. And I'll put the EMAs right back on real quick. There's still drop on the daily. So they're only in a level here. We got our level drawn out. So there's still drop to happen. So we can assume with the correlation, it's kind of looking funky here. We can assume with the correlation that if they have 3 levels on the hourly, we got a nice level 3 setup on the hourly, that they're about to drop. Okay? Is that making sense for everybody? I know that a lot of this might sound repetitive, but like I said, I'm just getting warmed up. That making sense for everybody? I want to see you guys' comments really quick. And you guys can ask questions. Don't feel afraid to. Got 1 yes. Everything making sense, guys? Okay, perfect. Anyone got any questions so far? Any questions so far? Go ahead and drop the questions if you have them. Okay. No questions? Because I can't see you guys as like, I can't see the chat when I'm going over things. So I want to make sure that I take a second to, okay. All right. So doesn't seem like anyone has questions. So I'll keep going. All right. So that's in a perfect world, things lining up. Okay. We have a level 3 on the hourly. and it's set up for a perfect drop for the level. Okay. Now, let's say things aren't as lined up as they could be. So I'm trying to think of an example of how or what chart. I think the Jappies did this. Let me look at GBP Jappy really quick. Okay, so I already have it drawn out, but look at this level here, guys. Look at this level. And if I were to pull up, I'm going to pull up another, oops. I'm going to pull up another chart, and this one's going to be the hourly. Okay. So on the hourly chart, most people just look at the EMAs and they're like, all right, EMAs are spread. You know, I'm gonna hop in on a sell. It's about to drop. But if we compare it to the daily chart, we have a channel. Okay, we have a channel. We can see clearly that they're staying within these areas of support and resistance. So this is our range. This movement is our range. When they come up to these areas, so for example, they came up to this area, the potential of them bouncing off of it and going back down to this area is very, very high, because the movement on the daily chart is a lot stronger. The support and resistance that it's creating to make this channel is a lot stronger than what's happening on the hourly chart. So when we see the price movement come up to these areas, we can assume that they're either going to bounce off of it or they're going to break through it and continue into a level 3. Okay? So, how can we, I want you guys to understand that we can use these things, these bounces, to our advantage. And it's not just on the Jappies. It's happened on a lot of pairs lately. Like a lot of pairs lately. Where they're coming up towards the resistance or the support of a channel. And on the hourly, it's lining up where they're in a level 3 or whatever on the hourly. And it's been lining up to either set up for a reset or set up for a full reversal. Okay. What chart was that? I think it was, what was it? And Brandon did the trade. Was it USD CAD? And I announced it in the Facebook group. I'm gonna double check what chart that was. Yeah, it was GBP Jappy. Okay, perfect. Or wait. Yeah, it was GBP Jappy. Okay, so wait, why does it look different? Okay, they pulled back. That's why. All right, so basically, on GBP Jappy, for example, we have a nice level 3. We got our nice spacing on the EMAs. We're expecting a drop to the 200 EMA. We look at the daily, and we see that they're in a channel. Okay, we see that they're within a channel. We see that the wiggle room, it's the best way to put it, the wiggle room is that they can come all the way down here if they have to. Now, chances are that they're not. And the reason why is because this level has been going on since December of 2016. Okay? It's been going on for a while. So chances are they're not going to go all the way down here. They didn't even come down here on this last hit here. Okay? So we can use the EMAs as kind of like a dynamic support and resistance. within the level. Okay. So we see that they're coming up within the level. We see that we're in level 3 on the hourly and it's setting up for a drop. When these two match, and we see that they're in a level 3 on the hourly and that it's coming up towards the resistance within the channel, we have a solid trade on our hands, guys. We have a solid trade on our hands. Okay? And we can most likely ride it a lot longer than usual. We can usually ride it, if we're in the middle of a channel like this, we can usually ride it to the EMAs, the 50 and 200 EMAs. Okay? It's like a dynamic support and resistance. We can ride it to that. If they break through those EMAs, we can ride it to the end of this channel again. Okay? Is this making sense? I hope that it does, because I didn't talk about the levels like this on the real training. About the recording, somebody asked, is this message being recorded? Since we've had so many issues, like, getting, because you guys keep getting cut out because I'm in a hotel right now and the internet is kind of being janky right now. I'm not sure if the recording's going to stand, if it's going to hold up, but I'm going to try my best to see if it, like after it is recording, but I just want to see like what's going to happen once I actually stop, and I might have to piece all the clips together and all kind of stuff. So we'll see. So that answers that question. So somebody asked, how do we verify if we're going to get through a bounce off or if we will get a breakthrough? Okay. Now, you have to understand that to answer that question, you have to understand that it makes up a full picture. Okay? Everything makes up a full picture. So, if we look at the hourly, and that's like our hour of power, we've been studying it for months, and we see that there is a level 3, a level 4, or a level 5. And then we take a quick look at the daily and we see that they're within a level and they're coming up like this towards the resistance of the channel or of the level. Okay? We have to use that knowledge to our advantage. We know that there's a imminent pullback on the hourly chart. Okay? It's imminent. We know that these moves happen. It's just the thing that kind of confuses people is when to get in them. These moves always happen. But we see that we're in a level 3, 4, or 5. And then we see that they're coming up towards the resistance on the daily. What can we assume? Okay? We can make an assumption that they're going to bounce off of the resistance or the support on the daily chart so that they can complete the pullback on the hourly. Okay? Now, you also have the option to wait it out. And this is what I've been doing personally lately, is I wait mine out. I've been trying to train myself to ride off of the daily's movement because it's a lot stronger movement. Okay? It's a lot stronger movement, so that means more pips, more profits for me, more vacations. Okay? So basically, you have the option to wait it out to see if they do break. If they do break, you know that you have a good trade on your hands. You can ride that thing as long as it takes. UJ, for example, USD Jappy. Yeah, they did a quick little scary pullback. But I'm riding this thing to the moon. Like, look at this. We got our channel. We got our channel. See these hits? I draw this out. We got a nice level here. Chances are they won't go back down all the way back to this last level or this last hit support. They might bounce off of this EMA to continue on up. But when they break through here, the upward potential is absolutely insane. Okay? Now, the thing is the real question was like, how can we assume this? Or how can we, verify that it's actually going to break? The longer that they stay within a channel, the weaker it's going to become. And a technical trader will tell you that. It applies very true to this scenario as well. The longer that they stay within a channel, the weaker it's going to become. So this level started way back at the beginning of the year. Okay? Started at the beginning of the year. And they just been riding within this level, up, down, up, down, up, down. Oops. They've been staying within this level for months on end. Eventually, they're going to have to break. They have to. The behavior is the same on the daily as it is on the hourly. They have to break eventually. And they've already broke through it. They threw a wick up there and they kind of faked everybody out. Kind of sucked. If I drew a line here, let me see. I had it at 30, 114.30 last. Okay. They kind of threw a wick up there and kind of faked everybody out. But eventually, they're going to break through this and it's going to go through the moon. Like, genuinely, it's going to go to the freaking moon. Yeah, this drawdown sucks, but it's going to go through the moon. Okay? The longer that they're in a channel, to answer that question, the weaker it's going to become. And if you're looking at a chart looking at a level that has been happening for a while now, and you're seeing multiple hits within that level, that level hit here, hits all up in here, they're going to break eventually. Okay? Now, the way that you can kind of confirm that and to decide on your trade is you can say, okay, on the hourly, we're set up for a level 3. Do I want to ride this level 3 on the hourly, or do I want to ride overall trend? That's the decision that you need to be making. Those are the decisions that you need to be making. Do I have the patience to ride out any drawdown or ride out these pullbacks or whatever? Do I have the patience to do that for the daily? Or should I try to ride a quick little pullback to the 200 EMA on the hourly chart? Is this like helpful, or like All right, can you guys hear me now? I'm so sorry, guys. This is like so irritating. Everyone can hear me? I'm so sorry, guys. These Okay, so I'm trying to think of the last question that I received. The peak system. Somebody asked about the peak system. If we should use the peak system within these levels. No. Okay? No. The peak system only applies to third level. And that applies both to hourly and daily charts. Okay, you guys can write that down. The peak system only applies to level 3 or onward, 4 or 5. The peak system only applies to level 3 on both the hourly and the daily chart. You do not want to be using the peak system on level 2. Okay? You do not want to be using the peak system on level 2. Someone's calling my hotel phone. I'm sorry, guys. It'll stop in a second. But basically, one second, guys. All right, I'm back. I had to stop the ringing. Okay, so basically, you do not want to be using the peak system for a level 2 setup. You just don't. You kind of have to just write it out and kind of just use discernment on where you are in the levels to understand if there's going to be a bounce off of the support or resistance. If you see that, really you can't really assume anything's going to happen until you have the first hit and the second hit. And I'll highlight these. So you have the first hit and the second hit of the level. Okay, you can't really assume much. Now, in this case, the EMA is going to help you out because in this case, you can understand that bounces happen off the EMAs all the time. So you can use that as like a dynamic support. You can use that as a dynamic support. Okay, so basically, in this case, we identified with our first hit of the level. We draw that out into the future. We know that when they start this drop, we can maybe use the 800 EMA as the support before it even happens. Okay, so we can use this 800 EMA to kind of draw this out into the future before this price movement actually even hits off of it. Okay? Hopefully this is making sense. Just like with this little bounce that happened here, we can assume that they're going to bounce off of this support and resistance with the EMAs right here. We can assume that they're going to bounce off of that support as well. That the market is going to come right down here, bounce off, and then hopefully break through. I would love if they broke through right now. Okay? We can make these assumptions. Now, the thing is everybody's going to say they have some kind of crazy system to understand when moves are about to happen and yada, 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 yada. There is really no way. I don't care what they're teaching, unless they know somebody firsthand, they could text them, call them, go over to their house, that's a dealer, a market maker, there's no way to know when movements are about to happen, just like even with the traffic decoder. Yeah, we can see the contracts accumulating, but it's such a large market that there's no way to count all of the contracts accumulating. It's just impossible. Like, it really, really is. Unless you have a direct source to the dealer, there is no way. Wait, you guys can hear me, right? Somebody said that I've gone out again. Everyone can hear me? Okay. Sorry, somebody said that I have went out, so I just wanted to make sure. Okay, so like there's no way to assume when these bounces are going to actually happen, but you can use your discernment. Like, okay, they've only hit off of the level once, and I'm on the daily chart, so I know that the movement is going to be a lot stronger when they make this move, and they're coming up close to the line that we've already drawn out into the future. That was a bad line. They're coming close to the line. Geez, I cannot draw a straight line. They're coming up close to the line that we've drawn in the future, and they're making this move here. Okay? How can we use this to our advantage to assume what's going to happen? They've only hit off of this channel once. Like, there's really not much to base it off of. If we only have this hit here and this hit here, I guess we can kind of count this hit. But really, we only have these two hits within the channel. So we can assume that they're going to bounce off of it again. We had some movement up in here to show that to support the evidence that this is actually a resistance for the level. We can assume that they're going to bounce off of it. Now, this hit right here, we couldn't assume that they're going to bounce off of it. But we know it's a 50-50 chance. We know that they're either going to break through it or they're going to bounce off of it. We can't just be like, oh, yeah, they're going to bounce. Because it's actually made some movement within this range for quite some time now. So I think we said since beginning of 2017. So we can say that, all right, they're coming up towards it again, towards the resistance in the channel. If they break, I've got to buy here, all up in here. It's bad, but somewhere up in here, right after the break. If they bounce, though, however, I'm going to take a look at the hourly and see what's actually going on. Okay, I see that I'm in a level 3 on the hourly. If they do bounce, I'm going to ride it to the 200 EMA on the hourly. Is that making sense for you guys? Like, you guys have to get yourself in that frame of mind. Like, okay, they're coming up towards the resistance in the level of the channel. If they bounce, what are my options? I'm going to go down to the hourly chart. I'm going to see if there's a setup on the hourly chart. Okay. If they break through, what is my take profit? If I zoom out, we really don't even have a take profit on this. So that's why I'm actually so excited about it. But I'm assuming that they're going to go back up to this area up in here. You know how many pips that is? If they go up to the 123 level from 113 or 114, that's a lot of pips. Yeah, they'll probably have some pullbacks. They'll probably do a little something like that. But that's a lot of pips to be riding on. Okay? Oh my gosh. This still can't see it. Okay, some people are saying yes, some people are saying no. Okay. All right. So basically, what I was trying to say is that when we see on the larger time frames, that we're coming up towards these areas of support and resistance, we have options. We have two options. We can ride, like we're on the daily, right? We can ride it with the daily trend. We know that we're in a level 2 on the daily out of a level 3, so the only option is up. Okay? We know that's going to happen on the daily. But if we're within this channel, we're within this level, and we see that the market price is coming up towards these areas of support and resistance within the channel, we can make an option. We have options. We can make a decision whether to ride it off of the bounce or ride it off of the break. If we're looking forward to a bounce within the channel, we're going to take a look at the lower time frame. What's actually happening? Okay, what's actually happening? We see that we're setting up for a level 3, so we can say, oh, if they bounce on the daily, I already know what my take profit is. I already know what my TP is if they bounce off of this area of resistance, because I'm going to look at the hourly, and I see that they're setting up for a level 3 on the hourly, and we know that our take profit on the hourly is always the 200 EMA. That's easy. So if we see that they bounce, they don't break through. Refresh this. There we go. We see that they don't break through this area. We know that we can ride it to the 200 EMA. And what is that? What is this? 114.49 to 113.37. That's 100 pips. Over 100 pips. Okay? Is this like, I hope that this is getting your gears turning, because like this is literally how I have been trading, making my money. Is I play, like, I love when they're within these levels on the daily chart, because I understand that on the smaller time frames certain things have to happen. So if they're within these levels and they're playing within them, it's almost like, like I know a lot of people like to scalp the smaller time frames, and the way that they scalp is they find little small areas of support and resistance, and then they just play off of those support and resistance levels on the smaller time frames. The same exact thing applies to the daily chart. Yeah, it takes longer to make these movements, but the same rules apply. We see them coming up towards these levels or these areas of support and resistance within the channel or within the level. we compare it to what's happening on the hour of power. Okay? We see we're in a level 3 setup, getting ready for a drop on the hourly. And we also see on the daily that they're coming up towards a resistance. If they bounce off of it, we know that the 200 is our take profit. If they don't bounce off of it, we know that they're going for extra levels. Very important. If they don't bounce, if they break through this resistance, let's say that they broke through. We know on the hourly that they're going for extra levels. And we know that they're going for extra levels. The pullbacks have to happen. They're not going to just go straight up to the moon. It has to happen. Okay? They can't do that. They can't just make a straight movement upward. They have to pull back at some point. But we can see that, okay, they're in a straight rise on the daily chart, the real overall trend. So we can see that they're most likely going to go for extra levels. Is this making sense to everybody? Somebody asked, let me see. It's at level 2 on the hourly, so will it go to the 800 EMA? Okay, so for this particular pair, we take a good look at the daily. To answer this question, we take a good look at the daily, and they bounced off of the resistance. So what I'll do is I'll clean this up. They bounced off of the resistance here, which really sucked. I was so ready for them to break, honestly. Okay? They bounced off of that resistance. And like I said, the longer that they're within a channel, the weaker it's going to get. And the less movement that you can expect. So the chances of them going all the way back down to this bottom area are very slim. So what's our next line of support and resistance? The EMAs, right? So we can assume that if they are going to keep continuing down, they're going to bounce off of these EMAs here. We got another channel now. Okay? Got another channel now. Now they might start trending between these areas and eventually break. Okay? So, to answer that question, can we expect it to go to the 800 on the hourly? This is what I do. Okay? If I put a line here, this is my potential place where the support or where the price movement might go. If I put a line here and I'm expecting them to go to this area, okay? That line is at 111.75. I'm going to take a look at the hourly. And where's my 111.75? 111.75. Matches up pretty well, doesn't it? Yeah, it's a little, the 800 is a little bit up here, but it matches up pretty well. Yo, I'm back. You guys there? I'm once again, guys. I'm so sorry. This sucks. All right. So basically, hopefully, hopefully I got through that full point. If we looked at the daily and we see kind of like our dynamic support and resistance within the channel as our levels here. Okay. We're looking at the levels. We're expecting them to kind of bounce and so on and so forth. Okay. I put it a little bit higher this time now that I actually know. But if we're looking at this as our potential area that they'll go to, we take a good look at the hourly and we compare it. Okay? If this line that I drew is at 112.10, let's take a good look at 112.10. Matches up pretty well, doesn't it? So we can expect that they're consolidating now on the hourly. And that they're eventually going to break towards this area. Will they go through it? Chances are they won't. We can start assuming the price behavior based off of comparing the hourly and the daily's movement. The 50 and 200 look like they're about to cross. So it looks like we have an actual solid level 2 setup. So people that aren't long on UJ could possibly get in right now because the 50 and 200 are about to cross. Like, hopefully this is making sense. Yeah, so somebody asked, so basically we're building confluence on the hourly and daily based off of the strategy. Exactly. The behavior is the same. It has to do certain things. It does work in levels. They do drop back to the 200 every single time. But using these two tools, we can start making assumptions on what's about to happen. We can do that. We take a good look at the daily and we see the move happening on the hourly, we can assume that. Okay, so somebody asks, let's broadcast the question. Making the move to the 800 EMA on daily doesn't mean much since you can still predict a push up because of the level. And why can't the push be down from the level on the daily? I'm trying to understand that question. Making the move to the 800 EMA on daily doesn't mean much since you still predict a push up because of, okay, I think I'm starting to understand that. And why can't the push be down from the level on the daily? Because there's, okay, I think I understand you, and you can correct me if I'm wrong. So basically you're asking if they're like, for example, they're in a level 2 on USD JAPI on the daily. So you're basically saying, if I zoom out, you're basically saying, how do we know that they're not going to do this? Is what I'm getting from the question. How do we know that they're not going to just break out and go short all the way back down? The reason why we know that they're not going to do certain things is because they have limitations. They can't do certain things. Now, I'm not saying that they might not break out of this level a little bit and then eventually go up. But it's very clear by now, especially if you're a 1.0 member, that they have to do certain things. They only go up for a certain amount of time and they only go down for a certain amount of time. There is not one currency that you can name, one currency pair that you can name that has gone nothing but up or nothing but down. It is impossible. They cannot do that. Okay. So basically, to answer your question, they work on a system and they have to stay within that system. Yeah, they're going to throw certain curveballs. You know, they obviously can't give it to us on a silver platter, but they have to do certain things. So basically, to answer the first question, you're saying the push to the 800 doesn't say much or whatever. Yeah, I mean, I guess if you look at it like that, it doesn't say much because the overall direction is up. And that's why I'm still in. I'm in with like 15 lots, actually. I'm pretty exposed on it. Like, yeah, technically it doesn't say much because the overall direction is going up. But for those that are day trading, people that are looking at charts on a daily to weekly basis, it is important because you have to be comparing these things with what's going to happen on the smaller time frames. If you're just now looking for a trade, like, you know, if you're not like me and you've been expecting UJ to go up for a while now, and you're just now looking at a chart, it is important because you have to be understanding these areas where there potential bounces and potential breakouts can actually happen. It's very important for you to understand that. You know, because if you're looking at a chart for the very first time and you're trying to understand where your potential entry point is, you see the setup. The EMAs kind of show you that a setup is happening, but now you're actually starting to look at the nitty gritty. Like, okay, I look at the levels. I see that they're just coming out of a level 3. I see that they're in a level 2 right now. Like, what's good on my entry? You know what I'm saying? Like, you're thinking proactively. Like, okay, I see that they're coming up towards the resistance within the channel, within the level on the daily. I take a good look at the hourly. I see that they're in a level 3. Okay, here's my option. If they bounce off of this area on the daily, and I see that they're in a level 3 on the hourly, I'm going to just ride it short to the 200 EMA. If they break out, then I'm just going to ride it until yada, yada, yada place. So I'll probably set a buy stop, or I'll bounce off of the 50 EMA or 200 EMA on the hourly chart. Okay. So I'm like, all right, I see that, let's say that on the hourly, they've already started this move and we're expecting it, you know, it's coming up close. It's coming up close to the resistance level within the channel or within the level. And on the hourly, they've already started a drop. Okay, I see that they're coming up towards the resistance level. I'm going to take a buy off of the 200 EMA. I'm going to take a buy right here and ride it maybe till this resistance level. And if they break out, I'm really in the money. I'm about to take my family on a vacation. If they break out of this resistance, then I'm really about to buy everything that I want and more. You know what I'm saying? So you guys have to be thinking proactively like that. Okay, sorry, I was reading you guys' question. You have to think proactively like that so that you understand what to expect. Okay? That making sense, guys? Let me know if I'm making sense here. And if anything's confusing, please ask questions. I know we've been cut off a lot, but I want you guys to ask questions. No. Somebody asked, would you need a large account to trade off the daily and withstand the drawdowns? No. If you're like, oh, here's the thing. If you're leveraged correctly, and I know that I've said this 1,000,001 times. I maybe said it 3 million times by now. If you're leveraged correctly, you will never blow an account. Ever. Ever. Okay? And that's why I don't understand why like people have gotten mad at me recently and mad at the strategy for them blowing accounts, because it's not on me. It's not on the strategy. If you're leveraged correctly, you will never blow an account. Ever. It does not matter how much you screw up. You will never blow an account. If you start taking multiple trades, sure, you're exposing yourself more. So the rules kind of change. But if you take one trade, leveraged correctly, you're taking your balance, dividing it by 20,000, even 10,000 to be honest, dividing it by 20,000, and you're taking one trade and you're just riding it, you will never blow an account. I think people kind of underestimate the little formula that I gave you guys, because if you really do the math, the market has to move 1,000 pips against you to blow your account. 2,000 now with the new formula, 20,000 divided by your balance, your account balance. The market has to move 2,000 pips to blow your account. When have you ever seen the market move 1,000 pips or 2,000 pips? Like, it just does not happen. The worst thing that I've ever seen as a trader in the last almost 3 years of trading was the flash crash. And even that pulled back. Even that pulled back. They went 1,700 pips in a week. And then immediately after the flash crash happened, because the flash crash was like 500-600 pips in a matter of seconds, they pulled back 700. And I was in those trades. They kind of screwed up my portfolio. But I was in those trades and I was able to ride them, and I still made profit off of them. It was terrible to look at. Absolutely terrible. I was negative $25,000 on my account because of the flash crash. But I was able to ride that trade until it came back to profit, and I ended up closing it for like $300 or $400 a month or so later. You will never blow an account if you leverage correctly. All right, so somebody asked, thinking proactively, what happens if you set a buy stop above the previous resistance price? Oh, wait. I'm going to make sure I'm reading this correctly. Above the previous resistance, price throws a wick up there, activates your stop, and shoots back down through support. Is that unlikely, or should stop loss be set below the new support? Okay, this sounds like a similar thing that happened to me on USD JAPI this week. Okay, they broke through the resistance right at 114.30, somewhere up in there. They broke through the resistance, and actually, I'll do this. I'll just clean everything up and put it. Okay? They broke through the resistance, and they threw that wick up there. Okay? So they activated my stop, my buy stop. Now, it's really personal preference. I know that they're most likely not going to go further than this line down here. Okay? I personally know that. And like, yeah, I have 15 lots on it, but at the same time, I know that the overall direction is up, so I'm down for the long haul. I'm married, okay? I know people say don't marry your trades, but I'm married to this one, okay? Because I understand that if I ride it out, don't let it get to me, it's going to be worth it in the end. Now, to answer your question, should your stop loss be set at a certain place? It's really up to you. I personally, I told you guys straight up, I don't like stop losses. And the reason why is because now that I own my own brokerage, I understand how they work. People that are with Illuminated, I'll be completely transparent with you. If I wanted to close your trades, I could do so. If I see that you're near a stop loss, I could do so. If I see that you're near a TP, I can make it so that it doesn't actually stop at the TP. I can see all you guys' trades and I have full control over them. Granted, we don't do that. And the reason why we don't do that is because I was a trader before I started the brokerage and I understand how much it sucks. Okay? So that's why I don't use stop losses, because I understand how brokers can use them against you. They can see exactly where your stop loss is. Like, I hope that you guys can. If I was on my other computer, I would literally show you guys. I feel full transparency right now. I can show you guys active trades. It probably would be a breach of information, so I actually take that back. But literally, like, I can see where you guys set your take profit. I can see where you guys set your stop loss. And if I wanted to close your trade just for the heck of it, I'm feeling bad that day, I could do so. And brokers have the exact same capability. They hire people called risk managers or risk compliance officers. We don't personally have one right now because we're too small. But they have these people that they monitor your stop losses, they monitor how much profit you're in, they monitor how close you are to your take profits. And if it is not beneficial for the brokerage, you're going to get the short end of the stick. Yeah, some are better at customer service, making sure that if you do complain about it, you're happy. But how many people do you think actually complain? Very, very few. They might complain to their friends or to their Forex group, but very few of them actually take the time to message the brokerage, be like, hey, you guys took me out 10 pips early, or my stop loss hit, 5 pips early. It didn't even hit my actual stop loss. It just took me out of the trade 5 pips early. Very, very few people will actually reach out to the brokerage. So when it comes to stop losses, I personally don't use them. I just make sure that I understand how much drawdown I can actually put up with. I'm like, okay, they bounced off of this resistance. I know that they're most likely going to go to this line here, dynamic support. All right, it's around 112. Little over 200 pips. That sucks, but I'll ride it because the chances of me catching 500 pips are a lot greater. You got to weigh out your risk to reward ratio. If I see that they're going to go down 1,000 pips and I'm only going to get 100 pips, I'm just going to close out the trade. And I actually closed out a few of those trades the other day. Okay. So that's really, to answer the question, it's really personal preference. So what do you guys think, guys? Like, has this been helpful? Has this like cleared up some things for you, or like, is there any questions, or like, talk to me. I want to hear what you guys have to think about. Like, I want to hear what you guys have to say. Okay, somebody asked, do I correlate the same base currency to each other that's in different stages? For example, GBP CHF and GBP JAPY on the hourly. Okay, I do, but to some extent. Now, I'll pull up both of those charts. It was PVPCHF and GBP JAPY. And they're asking, do I correlate the two base currencies? So the base currency on this would be the GBP. Now, I do to some extent, but I only do it on the majors. So, for example, you guys can probably just Google the majors, but I'll list some. GBP USD, Euro USD, pretty much all the USDs. USD CAD, USD JAPY, NZD USD, USD CHF, you know, just an AUD USD, just to name a few. Okay, these are the majors that I compare it to. So when I start looking at cross pairs, and I'm looking at, let's say, GBP CHF, like you said, for example, I'm going to look at both GBP USD, GBP USD, and USD CHF, okay, to make up this. Now, what people sometimes forget, and we don't talk about it enough, trading currency and trading these currency pairs is you're simultaneously buying and selling, okay? And you're looking at the base pair, like you said. So if I cut this in half, the base is always at the front, the forefront of the pair. So, for example, GBP, USD, for example, okay? So, when the market goes up, GBP is going up and USD is going down. When the market goes down, GBP is going down and USD is going up. So, when I'm looking at GBP CHF and I take a good look at GBP USD, I see GBP USD is setting up for a level 3 going up, for example. So I'll put a little arrow so we can remember. Oops. Put a little arrow. I see that GBP USD is going up. And I see that USD CHF is going up as well. I'm looking at the two base, or the two majors. I see that GBP USD and USD CHF are both going up. When I look at the cross pair of the two, what's actually happening? I'll delete these arrows really quick. What's actually happening here? Remember I said when the market goes up, the base is going up and the secondary pair or currency is going down. So if we're looking at GBP USD and the overall direction is up, that means that GBP is going up and USD is going down. If USD CHF is going up, that means that USD is going up and the CHF is going down. Okay? So, if I'm looking at GBP CHF, GBP is going up and CHF is going down. If I delete the USDs, that's the difference. GBP going up, just like here. CHF going down, just like here. Okay? So hopefully that makes sense. I only compare it to the majors. I don't compare it to I don't compare crosses to crosses. Cross pairs to cross pairs. Okay? All right, another question. And I'm going to be wrapping this up soon. Somebody said, "How did you know that was going to bounce off the 800 on the daily on USD CAD? I think it was wait. I think it was and not go all the way down to the support line and then bounce off of that." All right. I'm trying to understand your question. I feel like there's like some grammar errors in there. Um let's look at USD CAD though. And they asked, "How did I know that it was going to bounce off the 800 on the daily on USD CAD?" Okay, here's the thing. They always, like, 9 times out of 10, they like these EMAs, they're there for a reason. Like they can be used as dynamic support and resistance. So, for example, we see that they're in a straight drop going towards the 800. We know that a pullback is most likely going to happen once they hit the 800. They have to stop sometime. Like, it's just, you guys got to wrap your head around that and really, digest it, that the market has to do certain things. So when it comes to USD CAD, yeah, they dropped, but all right, like, what can we expect from here? They finally dropped. We had our level 2. Remember, this is the one where it kind of went upward. At our level 2, they finally broke out. We see our 5200 cross when they finally broke out here. We see our 5200 cross. What do we expect? Well, actually, no. I take that back. I don't want to confuse you guys. We already had our 5200 cross back here. So sorry about that. But we see that they're coming towards the 800 EMA. We can expect that they're going to pull back there. We can use that. Remember, TP number 1 is the 200. TP number 2 is the 800. Chances are they're going to consolidate a little bit or pull back a little bit, and then they'll continue on down and set up again. Over and over and over and over again. Okay? So to answer your question, how did we know that it was going to bounce off the 800? Is we can expect them to hit these levels. Okay. Somebody asked again. Last question from me. Your strategy states that the market moves 100 to 300 pips per day and 600, I think you meant to say 1,000 pips per week. Is this fact aimed at each pair? Also, how do you count the pips weekly and daily? Personally, I know that that's the range. Okay. The reason why I put that part in the training is because it's supposed to eliminate fear. And if you guys You guys hear me? We're going to wrap it up here in a sec. It's kind of irritating. But I wanted to answer that question. All right. So when it comes to the 100 to 300 pips per day and the 600 to 1,000 pips per week, the reason why that is in the training, if you guys haven't understood by now, it's meant to eliminate fear. Okay? Things happen, especially as a beginner. You guys aren't going to always get the most pristine entry, even like even once you like really get in depth with everything. Like you're not always going to get the most pristine entry. Like it's just like, like it's almost like impossible sometimes. Okay? Now, the reason why I say 600 to 1,000 pips per week, it's meant to eliminate fear. You never, ever see the market drop 1,000 pips in a matter of seconds. You just don't. You never even see it move 1,000 pips within a few days, to be honest. You really don't see that movement happen. Like, you just don't. The worst I have seen was the flash crash. That's it. Like, that's literally the worst that I've ever seen within a short period of time. You know what I'm saying? Like, you have to understand that the less that you worry, the more profitable you're going to be. Because a lot of you guys kill yourself from good profit because you pull out of trades and you're setting stop losses and you feel like you're about to blow your account and you're letting fear get to your head. Like, my game changed when I learned to really, really step away. Emotionally is basically what I'm saying. Where I can look at red numbers, I can look at drawdown, I can look at these things. I'm not saying it's a good thing, but I'm saying like my game improved when I started to be able to look at this stuff and not be afraid. The flash crash was the biggest test of patience for me because it was abnormal. I'd never seen anything like that before. And it dropped 500, 600 pips in a matter of seconds. I was negative $25,000. You know what you could buy for $25,000? I was negative. I had to look at that after constant growth for months on end and look at that negative number for a month and a half. That was like the biggest test of patience for me. But at the same time, I'm grateful for it because now I look at a chart and I'm negative $10,000 or $5,000 or $3,000, whatever. It doesn't bother me. I've been through the worst. And a lot of you guys are like, it's almost like you're blocking your blessings because you have to understand that the market can't do certain things. And if you ride it, as long as you're within the right analysis, you can ride certain things. USD Jappy, that one bit me in the butt. It really did. This wick up here, that bit me in the butt. It really did. And it's going to continue to if it goes down to this area. But at the same time, I know that they're in a level 2 and the overall direction is up. So the payout is going to be a lot better. I'm not going to block my blessing by closing out the trade or setting a stop loss because I know that the market has to come back. It has to possibly bounce off of this area down here and ride on up. And really, there's no ceiling. If there's any kind of ceiling, it's going to be up here, or up here. That's a lot of pips. 118 or 123 from 114.30. That's a lot of pips to only deal with 200 pips of drawdown. That's a 400 pips if it comes here, or almost 1,000 pips if it comes here. So the payout is a lot better than the drawdown. Yeah, I didn't turn the screen on this time. I didn't turn the screen on, guys. As long as you can hear me, that's okay. Okay. So, I think I'm gonna leave it here, guys. Like I hope that this has been helpful. I'm in New York. Um, so I am gonna go out and enjoy the day, but I just wanted to make sure that you guys have a firm understanding of these levels. Hopefully it's been helpful. Hopefully, you guys got some things cleared up for you, and it'll help your game and all that. But like just shoot me a message, a personal message, and if you guys still need help, we could definitely talk about it. And yeah, I mean, everyone seems to be happy about it. Okay. Natalie, if your account's locked, just wait. It's just a waiting game. They'll unlock it. Support. All right, guys. Enjoy the day. Share the knowledge. Not everybody was on this webinar, so share the knowledge in the chats and in the Facebook group. Share the knowledge. I want you guys to talk about it and start really putting these ideas into practice, because it's going to help you. So, all right, guys. Take care. Have a good day.